What it do, YouTube? In today's video, I'm gonna be showing you how I trade supply and demand and how you can increase the probability of the trade going in your favor. Let's go.
Yeah, this is where I wanna be. Live my life like a vacation. Every night I'm
You can be whatever you wanna be. You can do whatever you wanna do. All you gotta do is put the work in and sit back and watch your dreams come true. You can be whatever you wanna be. You can do whatever you wanna do. All you gotta do is put the work in and sit back and watch your dreams come true.
All right, supply and demand, let's talk about it. One of the reasons that I love supply and demand is because it allows you to see when the big banks are in the market. The people that move the market makers, the institutional banks, it allows you to see when they're in the market. And I'm gonna tell you why this is dope. So picture this. You see that every time price gets to, let's say, $25, the big banks put their orders in. They have a stack of orders that they put into the market. And every time price gets to $25, that price shoots up to $100. Now, usually price only moves to maybe like $30, $40, $50 at max. Except for when the big banks get into the market and move the market, they have a ton of orders, so that drives up the price. That's supply and demand. So every time they put in all these orders at $25, you notice that they can't fit all the orders into that one order. So they have a leftover orders that the market, they're waiting for the market to come back to $25 so they can put their money or the rest of the market orders back in to get that price to go to 100. Every time it comes back to $25, it does the same thing. It shoots to 100. The big banks, they put more orders in. They can't fill them all because the orders keep coming in. They just put the majority of them in. You can see it on the chart. You can see big moves from the bank. So what you want to do is you want to put, remember, trading is a game of probability. So you want to put the odds in your favor. You know what I'm saying? You want to take high probability trades. So basically what you want to do is you want to put your money where the big banks put their money. So that's why supply and demand is so dope, because they can't fill all those orders in one order, so they have leftover orders. So price got to come back to those leftover orders. That's where you come in. Put your money with them. You put your orders with their orders, the leftover orders, because you know every time it get to $25, it's gonna take off to 100. Chances are. Okay, so yeah, supply and demand. That's what it is, and I'm gonna show you what that looks like on the chart. Now there are a few different ways you can trade supply and demand. This way of trading supply and demand, I learned from my boy Doyle.
So I just feel like if you just really been struggling, it's been years, man, you gotta switch something up or you gotta go even harder. One of the two. You gotta switch something up or you gotta go harder. Period, bro. But being consistent was never hard for me, man. Like, when you wanna change your life, like, bro, see, some of y'all, like, y'all know, yeah, I'm about to go in. Some of y'all never went through nothing. Like, I'm gonna be real. Some of y'all are fortunate. Some of y'all have the family that can fund your account. Like, bro, if you ain't really went through no adversity or never really went through no struggle, you don't really know why certain people go harder than certain people. It's because they've been from the bottom. Some of y'all never hit rock bottom. So you don't really know how it feels for somebody to come from nothing to skip past a lot of people. Like, damn, like, why is he going so hard? Do you know where he came from? Do you know how his upbringing was? What he had to deal with growing up? Like, you don't know. Certain people have a different level of hunger that they can unleash when it's time to show out. Like, real talk.
And I'm gonna drop his course and his Discord link and his YouTube down below in the description. He got some dope content. And yeah, he taught me this, and I got it already marked up, so pause the screen if you need to, take a picture. And I'm gonna go back through bar replay so you can kind of see my mindset. Now there are things that I need for this strategy. I need a break of structure. I need a gap. I need price to break a candle in the opposite direction. And I'm gonna show you what that looks like. I'm gonna just take you through the mindset of this supply and demand strategy. It's on a 5-minute chart. All right, so off top, coming to the market, I see these lows here. That's liquidity. And you got the highs up here, right? It's also liquidity for now. So you got your intermediate swing low here. That's your structure. And let's fast forward. All right, so right here, let's focus your attention right here. All right, so you see this up candle before this huge drop. That's the institutional banks, the big money, the market movers. That's them right there putting in their orders and shooting this price down. So we just gonna draw a box around this you can even use this one right here actually. The last up candle before this big drop, right? So at this point, we just gotta wait for price to one, break this structure here, right? And come back to this area where they made this big drop. Because I'm gonna be putting my order in right there with them, okay? So let's back out, see what it do. Price break structure. Now I'm waiting for price to pull back to this area so I can be a seller. Okay, so price taps into our supply area, and at this point we want to be looking for a candle to be broken coming down, showing that it wants to come down. It tapped into our supply area, it broke structure, and what makes this trade high probability is that there's a gap attached right here. You see that? That's what makes this trade high probability, because if this trade fills this gap, then it's going to be looking to come back down this way. And at that point, we can target liquidity right here. Or we can target liquidity here or here. If price didn't leave this gap right here, then it would have just been low probability. It still would have been supply, but this gap being filled right here makes this high probability supply. So now we're gonna wait and see if we get a, okay, right here you see where the candle broke right there? That's your entry. Stop loss goes over the top of supply or the top of this candle swing if you want to, you know, be a real sniper. But we gonna go safety first. And at this point you can take a 1-to-1, so that's, alright, so that's your 1-to-1 right here. Targeting liquidity. Targeting liquidity.
Targeting liquidity.
We're going to target to the bottom. Great risk to reward. High probability. Gap filled. Structure was broken, so it's showing, the market showing its hand. It's showing you that it want to come back down because they already broke structure. And there's so much liquidity here. All up under here. Liquidity. That's what the market gonna do. Go get it. So
boom, TP smack.
that's supply. I have a demand example here too. Same thing. You got the highs marked, right? You got the highs marked here. Price leaves this gap here, and it never comes back to this down candle, this down up candle. It never comes back and fills this gap. It stops short right there. You see that gap right there? Let me zoom in so y'all can see that. So this is our demand box. We're waiting on price to break this structure, come back down, tap into it, break a candle, and we're gonna target up here, liquidity. Price break structure, still never comes to fill this gap. We just gonna be patient and wait on it. It gotta come back at some point, and when it do, we're gonna be ready. Boom, look at that. Fill the gap, beautiful rejection candle. Now, if a candle breaks this one, we off. We in there. I'm gonna target the liquidity right there. Price broke the candle, we entered. Pull back a little bit, pull back a little bit more. Still in the trade, TP smacked. So yeah, this is the way I use supply and demand every day. High probability setups, gap attach, break a structure, price returning back to fill that gap, and then breaking a candle in the opposite direction. We in the market with a safe stop loss. We targeting liquidity, we targeting gaps. I hope y'all was able to learn something from this video. To the next one, I'm out.